everyone! Welcome back to another episode of Project Accounting. So, our topic for today is all about how to analyze business transactions. So, for this episode, you will be able to analyze business transaction and its effects to the elements of financial statements, understand the concept of increase and decrease in an account, and analyze the effects of business transactions to the accounting equation. Last time, we discussed about the accounting equation, pati yung mga elements of financial statements. Ngayon, i-apply na natin yung mga natutunan natin by analyzing business transactions. Dito, i-analyze natin kung ano ang accounts na apektado dahil sa mga business transactions and for what amounts. Let's define ano ba itong mga business transactions. Business transactions are events that has some effects on the resources of a firm or on the source of the firm's assets. Normally, transaction involves a value received or yung amount na natanggap at value parted with or yung amount na nawala. There are two kinds of transactions. It can either be external or internal transactions. Kapag sinabing external, these are transactions between business and outsider. Example nito is yung purchase of office supplies from outside supplier. Kapag naman yung transaction nangyari within the business that do not involve outsiders, it is called internal transaction. Example nito is when this office supplies being used daily in the operations in the business. So yung evidence of transaction that describes essential facts of the transaction is called source document. Examples ng mga source documents are receipts of cash paid or received, checks written or received, bills sent to customers for service performed, bills received from supplier for item purchased, and etc. Lahat ng source document initiates the process of recording a transaction. So para makapag-generate ng financial reports which will be used for making decisions, business transaction have to be analyzed, recorded, and summarized. So sa pag-analyze ng transactions, ito yung suggested procedures. First is alamin natin kung ano ang mga accounts affected or involved in the transaction. We should remember na there are always two or more accounts involved in every transactions. Next naman na dapat nating malaman is kung anong magiging effect ng transaction in terms of increase or decrease. We should take note na sa pag-analyze ng transactions, dapat ang point of view natin is yung business. So magbigay tayo ng ilang examples. So first example, Mr. Naruto started his own business by investing 300,000 peso cash. So si Naruto daw ay nag-start ang business by investing 300,000 cash. So ang first natin na gagawin is to determine ano bang accounts ang affected ng transaction na ito. So usually, there are two or more accounts affected. So in this case, ang accounts na affected ay cash and capital. Cash is obviously affected gawa ng sinabi na nag-invest si Naruto ng cash na 300,000. Yung capital account naman ay affected gawa ng investment is part of the capital. So after natin malaman yung accounts affected, next naman na gagawin natin is to determine the effect of the transaction. So ang ating accounting equation ay asset is equal to liabilities plus equity. Since alam na natin na yung accounts affected ay cash and capital, walang magiging effect sa liabilities yung transaction. Then since ang business ay nakareceive ng cash, ibig sabihin asset will increase. The capital will also increase kasi yung amount na na-receive ni business represent yung investment ni owner. Makikita natin na balanse ang ating accounting equation dahil kung nag-increase si asset, dapat mag-increase din si capital. So next example naman, purchased for cash, the office supplies worth 10,000 pesos. So bumili daw si business ng office supplies worth 10,000 using cash. So ang accounts na affected in this transaction ay office supplies and cash. So alam na natin yung mga accounts affected. Next naman is alamin natin yung effect ng transaction. Since both of these are in asset side, walang magiging effect sa liabilities and equity natin. Since office supplies were purchased, ibig sabihin nadagdagan ang office supplies. Tapos since nagbayad tayo ng cash para sa pagbili ng supplies, so mababawasan naman yung cash natin. Next transaction naman is returned office supplies because of defects receiving a cash refund. Dito, binalik daw yung office supplies na binili dahil may sira kaya nagkaroon ng cash refund. So, ang accounts na affected ay cash and office supplies. So, sa ating pag-analyze ng effect ng mga transaction, since both of these are assets, walang magiging effect sa liabilities and equity. Then since binalik natin yung office supplies, mababawasan yung office supplies na binili natin. Tapos since nagkaroon ng cash refund, so makakatanggap tayo ng cash kaya madadagdagan yung cash account. So next transaction naman is purchased office equipment on account. So bumili daw ng office equipment on account or in credit. Kung kanina bumili ng office supplies using cash, ngayon bumili naman pero using accounts payable. So ang accounts affected dito ay office equipment and accounts payable. So alam natin na yung office equipment ay asset, then yung accounts payable ay liabilities. So walang magiging effect sa equity natin. Since ang business ay nagkaroon ng office equipment sa pagbili, ibig sabihin na dagdagan ang ating office equipment. Then since nagkaroon ng utang si business sa pagbili ng office equipment, ibig sabihin mag-i-increase din ang ating liabilities. Next transaction naman is issued check in payment for the office equipment previously purchased on account. So nag-issue daw ng cheque para sa pagbayad ng utang. So ang accounts affected dito ay accounts payable kanina since ayun yung utang at cash kasi nagbayad si business. So alam naman natin na yung cash is asset and accounts payable is liabilities. So sa transaction na to, walang magiging effect sa equity. Since ang sabi, nagbayad si business, ibig sabihin, nabawasan na yung utang natin. So there is a decrease in liabilities at syempre, nabawasan din ang ating cash. So next transaction naman is paid office rental for the month. So nagbayad daw ng renta para sa office for that month. So ang accounts affected dito ay cash and rental expense. So dito, walang effect sa liabilities kasi nga cash and rental expense yung accounts affected. Alam natin na nabawasan ang ating cash kasi nga nagbayad daw tayo ng office rental. Kaso ang tanong, bakit nabawasan din sa equity? Kasi 'di ba gaya ng discussion natin last time, equity consists of the investment of the owner, withdrawal, pati yung net income or net loss. So kung titignan pa natin yung accounting equation sa income statement which is yung net income is equal to revenue minus expenses, walang epekto yung transaction sa revenue. Pero since nadagdagan yung expenses, assuming na zero si revenue, ibig sabihin magkakaroon ng net loss since mas malaki yung expense kaysa sa revenue. So kung babalik tayo dun sa accounting equation na asset is equal to liabilities plus equity, decrease ang magiging effect niya sa equity since may net loss. So next transaction naman is Mr. Naruto, the owner, withdrew cash from the business for his personal use. So si Naruto daw nag-withdraw ng cash sa kanyang business. So ang accounts na affected dito ay cash and also capital. Since ang accounts affected ay cash and capital, walang magiging effect sa ating liabilities. There will be a decrease in cash in this transaction kasi kumuha si Naruto for his personal use ng cash, tapos mababawasan din ang capital kasi kumuha si Naruto ng cash dun sa ininvest niya kanina. So there are times na gumagamit ng drawing account. For example, Naruto drawing account. So kapag may ganong account, usually, madadagdagan yung drawing account na yon kasi nga, nag-withdraw siya. Pero in the end, ang final effect niya sa ating accounting equation ay decrease kasi balance dapat ang ating accounting equation. So next transaction naman is receive cash payments from clients for services rendered to them by the business. So naka-receive daw ng cash for rendering services. So ang accounts affected dito ay cash and service revenue. Since ang sabi naka-receive ng cash si business, ibig sabihin there's an increase in cash. Kaso ang tanong, bakit madadagdagan din sa equity? Kasi 'di ba gaya kanina, net income or net loss affects the capital account. So kung titignan natin yung accounting equation sa income statement which is yung net income is equal to revenue minus expenses, walang epekto yung transaction sa expenses. Pero since nadagdagan yung revenue, ibig sabihin magkakaroon ng net income since mas malaki ang revenue kaysa sa expenses. So kung babalik tayo dun sa accounting equation natin na asset is equal to liabilities plus equity, increase ang effect niya sa equity since may net income. So next naman is rendered services to clients on account. So nakareceive daw tayo ng credit sa ating customer from rendering services. So ang accounts affected dito ay accounts receivable at service revenue. So gaya ng transaction natin kanina, since nakareceive tayo ng revenue, there will be an increase in equity. Then there is also an increase in accounts receivable kasi madadagdagan yung makokolekta natin from customers. So para sa ating last transaction, collected a receivable from a client. So nakakolekta daw ng cash mula dun sa receivable natin kanina. So ang accounts affected dito ay cash and accounts receivable. Since both of these accounts are in asset side, walang magiging effect sa ating liabilities and equity. And since nakakolekta tayo ng cash, madadagdagan yung cash natin. At mababawasan naman yung ating accounts receivable since nakolekta na natin yung receivable natin kanina. So magbigay tayo ng one problem for you to solve in order to apply what we have learned today. So the following are transactions of Gary's repair shop in his first month of business operation. May 2, invested 1 million cash in the business. May 3, purchased for cash a used equipment for 500,000 for use in the business. May 9, purchased supplies on account amounting to 3,000. May 11, billed customers for services performed amounting to 30,000. May 12, received a check from a customer for services rendered for cash amounting to 20,000. May 15, paid 5,000 cash for advertising the start of his business. Next, May 16, the owner invests additional 100,000 cash in the business. May 17, purchased office equipment worth 40,000, issued a promissory note payable next week. So on May 18, issued a check for the payment of supplies purchased on May 9, then on May 20, received 15,000 cash from customers billed on May 11. Then on May 21, purchased additional office supplies for cash amounting to 2,500. Then on May 22, issued check in payment for the promissory note issued on May 17. Then on May 23, paid creditor on account amounting to 4,000. And then on May 28, he withdrew 2,000 cash for personal use. Then lastly, on May 30, paid salaries of assistant amounting to 10,000. So for each transaction above, state in column 1 the accounts affected and in column 2 the classification of account whether asset, liability, capital, revenue, or expenses. And then in column 3, the effect of transaction on account, increase or decrease. So the first transaction has been done for you. So on May 2, the accounts affected are cash and Gary capital, then the accounts classification of these are asset and capital, and then the effect is both increase. So if you like this video or if this video helped you, please give a thumbs up and subscribe for more episodes. Thank you.